Good morning, traders. Good morning, team. How are we doing today? Today, it should be a bit of a one-man show, so it might be just a tad shorter than usual because I'm not going to have the input of a traveling Ryan and Stelios, who is attending family matters, family event. So let's straight away dig into what's happened overnight. If you guys want to talk about anything specific today, just put it on the chat. I'll try to have a look at it. But mainly, what's going to happen today is, apart from quickly looking at the overall picture, I'm going to dive in a little bit more into what to expect from the Bank of Canada, since we have the Bank of Canada coming up later today, and that is at 3 p.m. London time. So wherever you are, adjust that to your time, to your local time. So we'll dig into that a little bit deeper later on. What's happened overnight? Well, first of all, this and the news came out like literally a few seconds ago. The Chinese banks have heard what the PBOC and other Chinese officials were asking them to do, is to lower their deposit rates, and they will lower the deposit rates anywhere between 5 and 15 BPs, depending on the maturities. But it did not have a big impact on the CNH today. Perhaps the market is a little underwhelmed about the magnitude of the deposit rate cut. And also, furthermore, in China, we saw this trade balance out overnight, which saw a very big setback. So the exports dropped a massive 7.5%, where we were expecting a pretty flat number. Imports dropped a little less versus the expectations, but that makes for with both dropping, that makes for a big change in their trade balance. Just note that those numbers are, as usual, to be taken with a grain of salt. But anyway, the direction is there. This trade balance is going down massively this month, and that should, on rallies, keep a bit of a lid on the CNH, whether it's versus dollar or versus some crosses, remains to be seen. But anyway, I expect we will have a quick look at the CNH later. I expect some levels there to show up on the bid. That's for China. Then over to Australia, we had RBA Lowe speaking and Bullock speaking overnight, and yeah, they look a bit, they seem a bit panicky, really, about inflation still, and about the data coming out over there, and that pushes banks to reprice their expectations for the terminal rate in Australia. So Morgan Stanley was saying that they expect one more hike after this one. So the rates are at 4.10. But Goldman, for instance, they expect them to go much further. Their terminal rate, where they expected 4.35%, which is one more 25 BPs hike, they've now revised it to 4.85. So that's another 0.5% to add on top. And we see in the market that likely the market ran a bit short Aussie before the RBA yesterday, but now they need the market needs to reprice their expectations as well, and the Aussie is really doing pretty well this morning. I'll have a look at what's happening Aussie dollar, and also one in particular I'd say is the Euro Aussie, because the Euro is a bit lagging all the rest right now. So this Euro Aussie is really still interesting enough. In Japan, there's some talks going on that the government and the Ministry of Finance may be looking at buying back Bank of Japan's ETFs that they bought, and there's about $250 billion worth of those, and well, I mean, it depending where they value it at, but they value it at book value, so it's about, I think, roughly 30 or 40% below where the market value is. So the Japanese government is trying to make a pretty good deal, and they say that it is to redistribute wealth, which is one of the pillars of Kishida's government policies, which they aim to pass for middle of this month or towards the end of this month. So besides what may be happening at the Bank of Japan next week, we also should have a quick look or a close look rather at what is going on between this Ministry of Finance and the Bank of Japan regarding those ETFs, because if they want to use them to redistribute, and they are talking to redistribute ETFs to the younger generation, I reckon that had to do with at least partially a setback on the Nikkei today, because the market may expect that if there's still a big if, because Ueda said that they haven't even looked at it yet, that it's too early to look at it. So that might be a little bit of a battle going on there. But if that would happen, we may expect some people receiving those, just going into the market and selling them. But anyway, the Nikkei saw a pretty decent setback overnight, and I reckon it may have to do with those early discussions. They're actually not yet discussions. It's the Ministry of Finance. Suzuki said that they are just looking at the possibility of, but that's going to be an interesting watch for those who are trading and watching the yen, because it may change the picture somewhat and have a pretty decent impact on those Japanese stock markets as well. Then what else is going on? The US Treasury, and there's a lot of talk about what's going on now that the debt ceiling has been agreed upon. The US Treasury will need to replenish their cash balance, and to do that, and we spoke about that yesterday already, they are expected to need to sell at least about $1 trillion to $1.3 trillion worth of bills before the end of this year. And interesting to note, and if we quickly go forward to tomorrow, we have a first auction for the 4 and the 8 week bills. They are perhaps a bit short-term, those ones, but if they need short-term cash, they may already show us what the market would allow them to do and at what rates. So from tomorrow, I think we should be starting to watch what is going to happen on those US Treasury auctions, because they will drive the short or the belly, at least, yields. So when we all know that when the dollar yields are on the move, the dollar is on the move, and a lot of currencies are on the move on the back of it. Yen being one of them, probably the most close to the US yield moves, I would say. So and as I also said yesterday, we have to see if it is possible that a part of that money that is now parked in the reverse repo facilities and money funds will be interested in going to those auctions, perhaps putting their money a bit more actively to work than leaving them in money funds, if the Treasury is willing or forced to pay up. So I really think that we should closely monitor what's going to happen with those all those auctions in the next weeks or even months. Then what else? Yeah, on the side of everything that is going on now, we have to note that the Turkish lira is really getting heavy pressure right now. Let me have a quick look where we trade. Latest, it was down another 7% on the day. Yeah, we're down about 6-7% on the day in Turkey still. The market really did not like the Erdogan re-election. The confidence in Turkish finances is virtually zero, and the Turkish lira has massively devalued again. And for as far as I can see, I don't see too much on the horizon what may really change that in the immediate. It's going to be very volatile. I don't trade Turkish lira because on my main account I can't even trade it. People have been very protective of what's going on and the regulators and stuff. So one of my providers is not allowing me to trade it. But anyway, I'm even not really interested in trading it, to be honest. So that for the global news, I would say today, I don't see too much else unless you guys see something that you want me to talk about. But then let's move over to what's happened on the data front overnight. We saw a bunch of Aussie data coming out. Bit of an undershoot. Of course, market commentators will say this is the weakest since whatever. What is it? 2021, but really it wasn't very far from the expectations. So the Aussie hasn't really moved too much on it. Actually, didn't move at all on the Chinese data at all. Just a a few pips. But what's interesting though here is that the capex in Aussie was in Australia was pretty decent. So that has counterbalanced where the GDP may be a bit slower. But the main event was the RBA still seemingly keeping the foot on the pedal. But as we have seen in the past, they do act a bit like weather vanes, and whenever the wind changes, they will change rapidly as well. Fact is that the Aussie is still doing pretty well today. Few data out of Japan, which did not really impact much this morning. Leading index doing a bit better, but the prior one was revised by nearly as much. So going on, moving on there. Swiss unemployment rate didn't move the crowds either. We have to note that Euro Swiss is still trading around 97. The bounces are still very shallow. Yeah, people have been trading the dollar Swiss from the long side, but that's more a dollar move than really a Swiss move. If you want to trade Swiss, you really want to hear what the S&P is telling you. Sorry, what the S&P is telling you, and for the time being, they are still telling us they will continue to keep the Swiss strong to fight inflation. They have understood from day one that a strong Swiss franc is a partially combating the inflation. And I will say the day Swiss really has a chance of weakening is the day S&P tells us they are happy with the CPI and they are happy with where all the data are right now. And that day, I think it'll come. I don't know when, but it'll come. That day, I think the Swiss franc will have a material chance of weakening a bit. Until then, I'm not going to really fight this move, especially not in the Euro Swiss. Although we are entering interesting zones there, but I think it's more about what the S&P tells us that than what we may think Swiss has to do. The house price index in the UK coming down a little bit. We actually knew that already, that the house prices in the UK were coming down a bit, so that's not really a big surprise. German IP a bit undershooting the expectations, but then the revision was quite a bit better than the prior one, so that's 1-1 ball back on center point there. Norwegian kroner manufacturing production a bit negative, but there again the opposite revision. It didn't impact NOK too much. Well, NOK was a little weaker to start the day, but it strengthened quite a bit this morning. Perhaps I missed some news on the Norwegian kroner or Norges Bank or so. I don't know. French current accounts. Not really much to see there. No. Italian retail sales undershooting the expectations. Again, a bit of a negative, although the number is positive, but we are seeing those European data gradually losing steam as well, and that pushes me to say that even though Lagarde up to now was still very hawkish, I would expect personally that she's not too far away herself for calling this a day on hikes, or at least on the hawkishness that she the outright hawkishness that she is having right now. Sorry. What's further on the docket? Yeah, some more speakers out today as well. We have a bit of weekly mortgage data out of the US, trade balance in the US. Since trade is still pretty important globally, I'm not saying this is going to be a big mover, but just keep an eye on what's going on the trade side of things globally. It may have an impact, not an immediate impact, but like a lingering impact on currencies, as we have seen as well with the Chinese yuan, for instance. And then the main event, yeah, we'll have the oils out as well later on. What did the API do? Bit of a draw. Okay, so a bit of a draw. So usually the EIA data are not too far away from what the API showed the day before. So the main question here is, will it be a draw or a small build? Because we're quite close to the 0 point. But then the big one of the day is the Bank of Canada. And since RBA surprised us, and since the data in Canada have rather been supportive for adding another 0.25 percentage point, that clashes a little bit with how McClem was talking over the past weeks or even months, pretty much saying that they are firmly in a pause. But since then, the expectations have changed. Also, since the RBA came out, the expectations have already changed. So now, instead of being largely in favor of a hold, the expectations are pretty much 50-50 between a hold and a 25 BPs hike. It's going to move, I think, this Canadian dollar this afternoon, because the market has been trading those surprises, and I think a 25 BP hike will has already in parts been probably traded, but there is some room in this Canadian dollar if they really press for a hike this afternoon, and if they have to change their tone. So we'll have to look at what they do, the hike, yes or no, and then the tone. It could be a dovish kind of hike. It could be a hawkish hike if they really change their tone like RBA has done. It could be a hawkish hold, saying that they expect the next week, the next meeting, sorry, to rise again or to hike again. Or it could be a dovish hold, but I think a dovish hold is not really on the cards right now. Looking at the data that we had in Canada, out of Canada lately. Right. That is it. Let's move over to some prices. Move over to some prices. Let's see. There we go. This is the euro dollar. I don't have much to say really on the euro dollar right now. I think we're firmly in ranges. And for as long as this stays below 108, I would argue that we are still relatively on the bearish side right now. But 106.40 seems to be already strong enough to hold the sellers. It's more of a dollar thing on the one side. The expectations for the ECB to hike are holding it up on the other side. And what I've been saying in the room as well this morning, I think euro dollar is more of a tool these days to trade crosses than anything else. So I'm not really expecting, and we also do not have enough strong data out for the rest of the day to materially move the euro dollar around, I'd say. So for the time being, I think if you want to trade it, trade ranges. If you see moves back up to perhaps already 30-35, could be worth having a look at. But then especially if you would see like a bit of a surprise jump into the 107 3/4, 108, that could be enough for now as well. I think euro dollar will get much more interesting next week. One that is behaving very nicely is the cable, and look where we are, back at our 124, 40, 50 magnet. It's there's no way around. This level is really attracting and magneting whatever happens. You have a move higher, comes back to the level, then you crash through it. You do the move lower, and we come back to the level. So for me, the cable is very much still a range play. And if you look at a few trend lines, it's behaving pretty well inside whatever pattern you're looking at. So it's worth keeping an eye on those short-term trend lines. We also will have Bank of England next week, so we may have a bit of up and down in the meantime in the cable, but I think the Bank of England should be decisive. I wouldn't even rule out if cable trades bang on 124, 40, 50 going into the Bank of England. Why not? Yeah, so I still think the sterling has a little bit more in it than euro, for instance. So I'm a little short euro sterling, and I wouldn't be averse to try and catch something, but it will be always small right now. Catch something around this trend line, perhaps. I do not think that for the time being, unless there is something going on those US auctions, for instance, driving the US yields massively higher. I don't think there's enough strength right now to go and or enough weakness in the cable, strength in the dollar to go and test this 123 right now. And there's going to be a big zone here if ever we get down to this 123, 122, 60, 70. I've noted as well, been talking about that. If that would get tested, then we will have to be very, very cautious on the cable. Keep that one in mind, I'd say. Right, euro sterling. As I said, sold a little bit around this trend line. I just think it's because my feeling on sterling being a little better than on the euro right now. I wouldn't be surprised. I'm not going to look for massive moves either. If we get anywhere down to those mid 85s, low 85s, I'm going to be a happy man. Not in there for the huge moves either. That may be decided post ECB and Bank of England next week, unless we get different data out before that. That for the euro sterling. Yeah, just Mike. Bearish euro dollar. I think, as I said, I think we're in a bit of a range. I think the main move is done. But I fail to see with the kind of data that we get out of Euroland, I fail to see why we should really move higher materially, because unless something happens to the dollar, right? The dollar will always be a big driver as well, but purely based on European data, I think euro dollar is going to be a laggard versus other dollar pairs, if you see what I mean. I'm not inclined to really push it, because we could just be like flatlining here for a while until the ECB and the FOMC next week. Few of the shall I look at? I told you what I thought about gold, right? We're in a range, and I think we're in this range until we start to break back under here 1935-ish, and and on the top side 1985. In that range there, I think we're in a range. Silver, similar, idem ditto. It's trying to hold a bit of a trend line here. This could be some formation, developing here. For as long as we're above this 23, 30, 40, I think we're in this in a range, just a bit the same. We're going to see what happens with the US yields and over FOMC next week. I think the metals, unless there's something out really bad or much better on the Chinese front, I don't see really why metals should be really big on the move right now. Oil, since the Saudis have told us they were going to cut some more, it's tough to hold. Go a little bit tighter on this one. It's tough to hold the moves higher. So we had this jump, and then we're coming back down. As we've been saying, I think this 75 and a half on the one side, and then 70 on the other side is your first port of call. I think the inside trend lines can be removed now. It's really in a range right now, and then depending on what the developments are in China, for instance, on their economic data, if we see better data out of there, then we probably will have a chance to read this. But if not, this looks like a bit of a sluggish one, and on the whole, still in a bearish channel. That for oil. Quick look at our dollar yen, still no change, still this trend line holding. I don't know whether we are going to see a lot of speculation ahead of the Bank of Japan next week, but if we look at the prior meetings, we could see some more speculative moves, trying to think that the Bank of Japan is going to do something, but there's still going to be time, I think, next week to see this develop. In the meantime, and that's another cross where I see the euro underperforming the rest a little bit, is that this euro yen has now broken through this trend line, and if you look at this could be the developing head and shoulder. 148.5 is going to be the level that you want to monitor here. If ever this goes through 148.5, then we may really see deeper corrections in this. So, and that brings me back as well to another euro cross, where I think the euro is a little underperforming the rest. Here, Aussie yen is the Aussie, right? But we are trying to break through this zone again around 93. So keep an eye on what's happening here around 93 on a close of the day. I'd say if it holds, 93.80 would be a possibility there as well. But then I don't know, if you look at the Aussie dollar, we are through the 61.8 of the May decline at 80, but it needs to hold. We are just above, and it needs to hold. So that's going to impact all those Aussie crosses as well, and perhaps that's going to perhaps put a break if we fail here on the Aussie yen. But if we hold, why not have a look at 67.40? Okay, but the yen has something to say in that as well, in that Aussie yen, I would say. So here, 67.40 on the Aussie dollar. If we hold, if we start to fail, then we have to look at 66.30.40 again on the Aussie dollar. So 66.80, hold above or fail, I'd say, on the Aussie dollar. And then an interesting one, as Horatio mentioned, is Euro Aussie. That's seen a big setback, and we have broken the channel here. That was around 160.60, and we were talking about this 162, and then finally it gave up, and we are already through this. Before this move is over, we could be talking about 158.25.40. But then I would say reassess. If the Aussie does this last leg lower, then I'd say reassess. Yes, RBA, but then we need to see real data out of Australia to get the Aussie even stronger. And same thing on the Aussie dollar. I think if we get up to this 67.40, I think it may be enough for this move. On the top side, if you get back above 160, 70, 75, then we could see it back up to 62. But for the time being, this is still pretty negative. Right. Bank of Canada. 133 figure, 133.25 today. That's your main zone here. Trend line, prior low. If the Bank of Canada surprises to the hawkish side, I really expect this one to come under pressure, real pressure. And if it would break, then I think this prior low here around 132.20 may be your next target. And then we need to carefully watch what's happening. If ever this gets tested, because it's the low here, top here, not far here. I don't know whether there's going to be enough strength, because again, as I said on the Aussie as well, we talk about 25 BPs. Yes, it's a catch up on where the Fed may end up, but it's only 25 BPs, and yields don't tell a whole story. Then we have to look at again what oil and gas may be doing. But for the time being, all else equal, if the Bank of Canada surprises to the hawkish side, I really do think that we are in for tests on some Canadian pairs. Dollar Canada in the lead, because the Canadian data have been relatively supportive for the Canadian dollar. That to the downside. If ever this really gets down there, as I said, we have to be really very careful, because you'll see a gaping hole below here. Okay, so that may be enough if we see this move, because that's still like 1.5%, I'd say, from where we are. So that's already a big move, 1.5%. Also, I would like to add, for the Canada today, we could this week we could have a double whammy, right? Because we have the Canadian labor report as well on Friday. So that's why I'm saying the Canadian dollar is really going to be a mover today and for the rest of the week. What happens if McClem surprises on the dovish side? Then I reckon we can see a move back here through this prior high 134.60 and retest 135.15.20. They have to be really dovish to get it back up to 136, I reckon. Okay. As the market trades this, I think the market is having a bit of a positive bias towards the Canadian dollar. So if you see a surprise dovishness on the Canadian dollar, keep a close eye on what's happening around 135.15.20. We could be in for a jump and perhaps a failure, but then perhaps a slower move back into this zone. But if it goes through, then 136, and there I think this should be enough. So you've got your inside levels and you've got your outside boundaries, levels of no return, I call them, to watch on the dollar Canada. A very interesting one is Euro Canada, right? You look at this. We had this big move lower already, and then while I was off, this big fight. We've always highlighted this zone here in the 146. This big fight, and the fight was lost by the euro. So now this Euro Canada is trading around already interesting levels here, because that's where we started the last big leg up from, but mainly here double bottom around 142.35.40. We are trading at 143.25 right now. A hawkish Bank of Canada, sorry. This is a move that can be done in literally 5 minutes if they're hawkish. So watch out very, very closely what's going to happen if we reach 142.40 on Euro Canada, right? The next stop may be 140.80, and then especially here 140 the figure. There's going to be, of course, a big psychological level at 140, and there's a bit of fib action going on there as well. So this is going to be a big level if ever we get down there. But the first one to really watch very, very closely is 142, 30, 40, 35, 40 on the Euro Canada. Okay. Top side, if McClem is dovish, 144.25, 144.40, 45. This is where you have to monitor what's going to happen there. It's your high from Monday and rejected, and this is where we have to be careful with a possible retest failure if they are not too dovish, just a little bit, or on a hold. So that's going to be your first level to watch. Then you have another one above here, 140, call it 90 figure, 144.90 figure. Yeah. Okay. Now, Horatio and Gavin. Yeah. The question, Horatio, Sterling Aussie. Just taking your question. Sterling Aussie or Euro Aussie is short. I'd say Euro Aussie if you want to be short, or if you want to job it short or stab it short. I don't know how you call it. Because my view on the sterling is slightly biased towards the better behavior of the sterling. So for me the choice would be Euro Aussie if you want to trade that one. Yeah, same sterling Canada. Yeah, sterling CAD. If the I'm not usually looking at that, but for Gavin, I'm going to have a look at it. Sterling CAD, you're saying? Yeah, if McClem disappoints, sterling could be one. Sterling could be an interesting one. Oh, we are at the bottom of the daily cloud as well in the sterling CAD. Or around there. This could be an interesting watch on a dovish Bank of Canada, I would say. If you're positive in sterling, like I'm not really very bullish sterling, but I'm just mildly positive in sterling. We are also trading below this trend line. So if you get back above 167.30, 35 and hold there on the sterling CAD 40, that could be a positive sign for this one. That would be one in case perhaps to watch on a dovish Bank of Canada. If they are hawkish in turn, then we could be in for a test of 164. So yeah, 164.25, 60 zone there. Yeah. That would be, I think, a possible target if we get there. So that's a little bit lower than your 165.40, right? Another Canadian pair that we have to look at is Canada Yen. Canada Yen is in an interesting zone here, right? 104.20, 104.5. This is where you close below or above after the Bank of Canada. See it here, see it here. It's been an area of, it's been a battlefield, and it's a fib field as well, area as well. So that's your level, I think, on the close that you watch, 104.20, 104.50. We get a dovish Bank of Canada. We could be in for a retracement. If we need to break back under 103.65.70, I'd say. But then we could be in for a move back down to 102.25, 102.40, even 101.90 figure. That is possible if you get a dovish Bank of Canada there. If in turn we get a very hawkish one, Canadian yen may be on its way to 105.80 for a starter. Here. And bigger zone to me, if that's the direction, right? There's a lot of ifs. Is 106.90 figure. That could be a really good target for a very hawkish Bank of Canada. So that is my round of what I'm looking at in the Canada. Aussie dollar covered it. Kiwi, I have no idea right now. Let's have a look on those emergings. Yeah, mainly, and that's another euro cross, right? Euro mix has really been dumped off late again. Mexican peso is still your 11% currency. The dollar mix is trading weak, and that's no support for the euro mix. Yeah, for as long as we are under 1870s right now, this still looks to be very well oriented lower. We have to see what's happening on risk for this as well, or when Bank of Mexico will tell us it's enough. There's a bit of support coming up in the 18.25 zone. Okay, that's another 1.5% from where we are now. So keep an eye on that one. But if you look at the overall move, it's still very negative. The Mexican peso, as I was saying yesterday as well on my return, is still behaving very, very well. We had this rebound here up to 18 towards the second part of May, and that already, just the first rebound levels have already been rejected, and we are now trading below the prior low on the dollar mix. It's still very heavy. It's even trying to break below the channel here. This one, dollar rand, is on the approach of interesting levels here. So you have this again. Last time we held in this first extension zone. I know it's a bit difficult to see, but that's basically 18. That's basically 19, the figure. Okay, but your big levels will be here if ever we get back down to 1880 around. That is your big level now to watch. 1880. I don't know really why the rand is strengthening. I think it's more like the market is behaving positively. Equity markets doing pretty well, and the move perhaps being crowded. Let's not forget that the rand is also, what is it, a 7% currency. So the market can't stay short rand for forever, because that's biting in the funding. So we saw a drop back down below 1935. That's where I abandoned ship on the last bit of my longs that I had. And now I'm waiting. Either we see what's happening at 19. We are really on the approach, because we are trading 1908 here. We are really on the approach of this 19 zone, so keep a close eye on that one. But the big one to me is here, 1880. And if you want to catch a knife, which I may do, you have like about 0.5% risk or so on this. It goes through 1870, then there's something different happening on the rand. That for that. China, we're trying to correct here. We are back in the 712s. There's a bit of a zone here around 711. I'm inclined to say we are not done with this, and if ever it comes back down to around the 706, 708 zone, I'm going to try and catch a knife, perhaps. The main idea is that for as long as we are above 7, there is still perhaps room to move a bit higher up to 720. If you get down back below 7, then the party is over, I think, for this move again, and then we probably will correct deeper. But for the time being, it still shows on decent dips. It still shows willingness to trade a bit higher. So for the time being, I may think that we are not completely done with this move on dollar China. Right. I think I've covered most that I wanted to cover. If you have any last questions, shoot. But if not, then we're going to call it a day. Yeah, so for the yields, we're trying to stabilize, right? The twos, they're holding well above this 25-30 zone right now, but failing to make any headway. If you want to have a look at the short term, it's 455. If we get back above there, we may push a bit higher. If we get down below, back below 440, 445, then we may retest the support zone. That's in the short one. And if you really want to trade euro dollar, you know what I'm looking at as well, right? Apart from sheer euro dollar, I'm looking at those differentials, and that's why I'm also thinking why euro dollar is perhaps lagging the rest is because we're still below this this zone in the differentials. If we start to move back above here, and this could be done on next week ECB, that should give the euro a little bit of a shot in the arm, I think, the euro dollar, and then we could start to move higher again. But as long as we are below here, I think we are in more of a range, really. And that is it for me, ladies and gentlemen. Trade safely on the Bank of Canada. As you know, I think we are going to move on the Canadian dollar for the rest of the week. It's going to be hot, I think. So that may be your main focus for the rest of the week, apart from the Aussie. And then that's it. Trade safely, and we talk again tomorrow, hopefully with Stelios at least back. Thanks everybody for joining me today, and talk to you tomorrow. Bye-bye.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.